you've got the Aussie dollar falling just as commodities are firming, it's a two-way win for the resources space. So nearly all of them have US dollar denominated earnings that they need to repatriate into Australian dollars, while a lot of them have Australian-based operations that they pay their costs in Aussie dollars. So they get a two-way win there. So it's going to be a real driving theme behind supporting the space, in addition to the things we've already pointed to, the fact that we're ex-capex cycle, we're ex-downgrade cycle, commodity prices are already moving. So to me, it's hard to see why you get any concern from the current volatility, which we were highlighting a week or two ago was pretty likely. We've had a strong re-rating. People will see it as a chance to switch out. But to me, it just creates an opportunity, the volatility we've seen last week, to dip your toe back into the sector. So in terms of what's happening, overnight we had BHP and Glencore really change their key message to the market, that really big, in a big way, turning very positive, talking outwardly about growth, a complete 180 on the key message they've been delivering to the market over the last 9 months in particular. BHP cutting an additional $3.6 billion of costs out of the business is also an additional positive help in their cash flow. But and then Glencore talking about the fact that we're going to see, we're already seeing a structural deficit in copper, nickel and zinc. That's going to provide further legs to BHP and Rio, with base metals really largely overlooked by the broking community at the moment in their forecasts. On oil, which is really, I've been highlighting for a while now, is the X factor for BHP. We've been pointing out that, not predicting something like Canada's wildfires, but the fact that the supply chain is so sensitive to any supply interruption, just given the small size of the surplus. So at the moment, the surplus had shrunk marginally before the Canadian wildfires to about 1.5 million barrels per day of extra supply versus demand. Now, if you take out that additional 2.5 million barrels of supply that's been knocked out of Canada, that puts us back in a 1 million deficit. So that means that, Coppo and other reports where they're freaking out about the fact we've got 60 million barrels of oil stockpiled in the US and Europe and it's the end of the world. That's only 60 days on a deficit of this size. So, the market's switching back to deficit. The oil price is already in the mid-40s. Currency's falling. It's just hard not to get positive. So I really just implore people, it's not the right time to switch out of resources on the first initial signs of light back into high PE stocks. I just think that you should be looking to top up on some of our house names. So things like Oil Search and BHP, that they have two big core quality names that we're still pushing quite aggressively. And then if you want a bit more high beta, a bit more risk, certainly I'd look at South32 and Origin. We've got a buy on both of those as well.